If you're an investor, you need to stop doing this in order to be profitable. If you invest inside of any market, you probably buy into stocks, crypto, and probably broad market index funds. But the main reason that most investors end up losing money is because they're either impatient, panic too much, or follow into hype. And one of the main reasons that a lot of people do in fact lose money is because they sell off their investments when their investments go down just a little bit. Now, if you're looking into today's market, there's definitely a whole lot of red. Everything is down right now. Stocks, crypto, all of the index funds, and etc. And it's really just crazy to think about because just the other day we were hitting all-time highs. But right now the market is definitely looking terrible and new investors are definitely panicking. If you're not investing either today or yesterday, then you're probably down on your investment right now because you didn't really buy in all the way at the bottom, which is totally fine. But what you need to avoid doing is buying in and then selling off as soon as you lose some money. As an investor, it is extremely vital that you understand that not everything will go your way when you start off. If you're a panic seller, you should definitely consider looking into the bigger picture. It's already been proven time and time again that over the long run, the markets always seem to bounce back after they fall. As we've seen multiple times in 2001, 2008, and probably even recently during the pandemic, we've seen that even after market crashes, we have a huge rise right afterwards and start creating new highs. And if you thought about day trading your money and just buying in and selling out as soon as you make a little bit of profit, you also have to keep in mind that at any given moment, an investment could really drop if it's extremely volatile. Don't forget that it's already been said multiple times that over 90% of day traders end up losing a lot of money due to buying into an investment and selling off fast. And at the same time, if you're using things like a stop loss and a take profit, you're probably going to hit your stop loss a whole lot of times before you could really hit that take profit. Another thing to keep in mind when day trading your money is that you're not going to be profitable as consistently as holding for the long run. Holding for the long run is definitely the safer choice to make, and if you look back at different charts, you can definitely see that it's had a steady line of increase. I'm not going to lie to you guys, at one point I actually tried to day trade and I gotta say it didn't work out, mainly due to the fact that timing the market's actually pretty difficult. You try to buy into a stock or a crypto and you see the potential for it to go up due to some news releasing or due to some pattern that you saw in the past. But you have to keep in mind that what happened before can't always happen again in such a short period of time. The difference between day trading and trading for the long run or investing for the long run is pretty much that in the long run, we have a lot of statistics that are going to be proven to help that stock price or crypto increase steadily. But when day trading, anything can affect the price movement. Whether a whale dumps a coin or you have some random news release about the US trying to ban something or China trying to ban something, and overall it just messes up everything for you. If you're really looking to make money and support yourself and create generational wealth, it's definitely worth doing your research to find a strong firm or company that you really have belief in that is going to be successful. Investing in it for the long run is probably the best choice that you can make due to the fact that over time it'll have so much to back it up and it'll really build a strong foundation. And remember, even if your investment does end up going down a little bit, it's not the end of the world. You don't have to keep selling off. One thing that you could also consider doing is dollar cost averaging. With dollar cost averaging, you're pretty much buying into a stock consistently, even if you're using just a small portion of your money. Well, not even a stock. It could be a stock, crypto, or whatever. It just depends on what you choose to invest in, but overall you're buying in slowly, and over time you'll see that you still have a consistent profit coming in because you're buying into the market no matter what, and over the long run it's going to be bound to start hitting new highs if it's actually a successful and reliable company. I've actually made this mistake where I had $3,000 that I wanted to invest and I put all of it into Ethereum. Now at the time Ethereum was sitting at a whopping $3,000. So when I had one whole Ethereum, I kind of messed up because the very next day it ended up dropping 25% and I could have bought in at a much lower rate and owned more had I been dollar cost averaging. Instead, I ended up putting my money in all at once and it kind of killed me because I really messed myself up and I was down 25%. And the worst part about not dollar cost averaging is you really miss out on all these sales if you put your last dollar into an investment without giving it any time. And if you guys feel like you can't really hold on to your investments and that whenever you see red, you start to panic and just need to sell it off, what you can do is open separate investment accounts where you'll just have yourself blocked off and have multiple configurations that you have to go to get into your account so that you could avoid the urge to go in and sell off your investments. Doing this has definitely helped me due to the sheer fact that I know that I have to go look through all these multiple confirmations through my email, through my phone number, and all this stuff. And it really just kills the mood for me because I don't feel like doing it. So in reality, it's really helping me hold down my investments without really having the urge to go in there and sell them off once I see they're down. And trust me, I know as a new investor, it's definitely difficult to see yourself down 50%, especially in today's market where everything just seems to be plummeting. But the way you have to look at it is if you're buying in at this beautiful discounted price, by the time it goes up to where it was at before, you would have already made a beautiful profit that a lot of people probably missed out on if they've been investing for a while. In my case right now, seeing the markets down like crazy and seeing a few cryptos dropping from like $40 all the way down to $10, I'm not really panicking because I see so much opportunity in just buying into them at this low price. Think about it like this. If you buy into a crypto that's $10 right now and it goes back up to where it was just at the start of this month, you could potentially 4x your money if it were sitting at $40. And at the same time, don't just fall into the fact that yes, everything is down. You have to also think about the fact that everything has a potential to go up because it has research and it has analytics to back it up. Although everything is down, you have to look at it as an opportunity. And trust me, this is not financial advice, but this is just my personal opinion. But over time, things seem to fix themselves. And if anything, investing right now is probably the best thing for a beginner to do just because you'll see maximum returns that a lot of people won't get to touch since they're already in the negatives. Now, if you guys really are paying attention to the market right now, I understand that you probably don't know how to feel and that it's pretty confusing because I know it's definitely difficult for you to see everything that you've worked so hard to earn go back down so much in such a short period of time. But at the same time, think about how much of a bigger difference it'll make once it goes back up to where it was at before. I personally feel as if there's too much hype going around with crypto right now for it to just die off completely, and stocks are proven to have way too much capability of helping the whole market run. So there's no way they're just going to disappear. So if we're being real here, everything probably will bounce back in the next few months. And a lot of people are going to regret selling off their investments once they realize that they could have been profitable if they had just waited 2 extra months. If you're a new investor and you think that you're going to start selling off your investments, find another application to transfer your funds over to avoid making that mistake. And if you have funds that are currently in the negatives, just consider dollar cost averaging and not selling off your investments right away. New opportunities present themselves every day and it would suck to miss out on them. So if you found any of the tips in this video useful or helpful, please consider smashing that like button and subscribing to the channel. And also don't forget, we're in this together. But either than that, I hope you guys did enjoy the video and I hope you have a great rest of your day. See you guys next time.
See you, chump.